Speaker's Corner aboard the Villa Vie Odyssey, hosted by Kit Cassingham.
Welcome to Speaker's Corner.
Good evening, Mrs. Cassingham.
Good evening, Mr. Cassingham, and good evening, Mr. Taft. I know, but now I'm being recorded. I'm kind of looking forward to this. I don't usually like thinking about taxes. I know you guys do like to think about it, which is why you're here. So Fred is a longtime computer programmer. He finds design flaws in the math portion of computer chips. He has been a beta tester for Quicken and now uses the free GNU Cache. Is that how you pronounce that?
Yep.
Okay.
GNU's an animal.
I know. But I thought it was pronounced new. Anyway.
Yeah.
He's also a wicked trivia competitor and a rabid gamer. He loves to travel. And he's the co-author of a math puzzle column for over 50 years. So Fred Tydeman, foreign investments, accounts, and assets for U.S. taxpayers. Take it away, Fred.
Thank you. So how's the mic volume?
Good.
Okay. So this talk will be about what the U.S. government wants with regards to foreign investments and assets, how and where and when you have to report all this. So qualifications, I have none. But I like numbers. I am not a CPA, a certified public accountant. I'm not an EA, an enrolled agent. And I'm not a lawyer. Those three people are the kinds that can represent you before the IRS. On the other hand, I do find errors that the CPAs make in the tax information they give me. However, I have done FinCEN 114 FBARs, which is one of the forms I'll be talking about, and 1040 personal taxes for several people, including the Form 8938, which is also what this talk is about, and Form 116, also another form in this talk. I've also done 1041 trust tax returns, a 1041 estate tax return, a Form 990T, a return for an IRA that has unrelated business taxable income, and a Form 709 gift taxes. So I've done a few tax returns. Okay, FinCEN 114 FBAR. So FBAR is Foreign Bank and Financial Accounts Report. It has to be filed with the U.S. government if the sum of the value of all of your foreign accounts is greater than $10,000 on any one day of the year. It's supposed to be filed by April 15th, but you get an automatic extension to October 15th. The kinds of accounts that the U.S. government cares about are ones where you have the ability to sign, you have signatory authority over the account, and also accounts where you have a financial interest in the account. So if you open a bank or a brokerage account in a foreign country, you have signature authority over that account and you have a financial interest in that account. If you buy real estate in a foreign country, most likely you're going to have an escrow account involved to buy or sell that real estate. That escrow account, you didn't open it, someone else did, but you have a financial interest in the account. You have to report it. And if you have life insurance or annuities, the insurance companies open the accounts, but you have a financial interest in them, so you have to report them, if these are foreign accounts. You do not have to report an account that is strictly cryptocurrencies. And the account has to reside on a foreign server. If it's on your own USB memory stick, they don't care. But if the cryptocurrency account has any cash in it, then it's got to be reported. If it's just pure crypto, you don't have to report it yet. If you have physical stock certificates, or if you have stock that's not in a brokerage, like from what I understand, our Villa Vie stock, you do not have to report it. An IRA account, retirement accounts do not have to be reported. Physical foreign currency, you don't have to report it. And you file it online at that web address. It's not part of a tax return. It's a separate entity in the US government that wants its information. If you don't do it, the fines start at $10,000, and I believe the worst case is 30% of the value of the account if you do fraud. Now, Form 8938, Statement of Specified Foreign Financial Assets. This gets filed with your 1040 tax return. It is the sum of the fair market value day by day throughout the year, and you ignore the value of any loans you have against the asset. So like if you're buying a house with a mortgage, you don't care about the mortgage as far as the value is concerned. You have to file this when the value of all your foreign assets is greater than $75,000 during any one day of the year, or greater than $50,000 if it's the last day of the year. And you double those numbers if you're married filing jointly. If you're an US expat, the thresholds are a lot higher, 300,000, 200,000, but as far as I know, none of us are US expats, even though we're living on this ship. We're not in the US very much. And I'll get to a slide later explaining why we're not US expats. So Form 8938 has reports of both accounts and assets. So accounts is just like the FinCEN FBAR 114. Banks, brokerages, escrow accounts, insurance, annuities. And here you do have to report your crypto if it's on a foreign computer. You also have to report if you have an interest in foreign entities, such as corporations, partnerships, limited liability companies, trusts, estates, or foundations. If you have any of these, you've got more IRS forms to fill out besides the 8938. I've done a few of them. There's more work. You've also got to report assets. If you own real estate in a foreign country, and it's either not in your name, such as it's owned by a foreign trust or an LLC, you've got to report it. If the real estate has a mortgage, if you've got a pre-sale real estate purchase agreement, you've got to report it. Foreign stock, not in a brokerage, such as the Villa Vie stock, you've got to report it, as long as you meet the thresholds for the reporting requirements. What not to report. You don't have to report real estate if it's in your own name and fully paid for. Precious metals, gold, silver. Personal property, foreign currency, hard currency. Money you can actually touch. You file it with your 1040 tax return, and the fine is $10,000. And I'm not sure if it's $10,000 one time or per account you don't report. So far, those two forms do not impact your tax return. It doesn't increase it or decrease it. It's just information given to the US government so they can try and track where all of your assets are. So in the future, they may want to go after you if you don't report income from them. Form 1016, foreign tax credit. Okay. Say I have a CD at a bank in Colombia and I earn $1,000 of interest in a year. Colombia will tax 20%. So they'll take 200 out of that 1,000 as their income tax for me earning income in their country. Now, the U.S. government has tax treaties with a lot of countries so that you do not end up paying the tax twice. So that when I go do my 1040, the $200 tax I paid to Colombia becomes a $200 credit off of my taxes owed to the U.S. government. So I still pay the same amount of tax. It's just that some of it went to Colombia and some of it went to the U.S. Okay, the foreign earned income exclusion is another form that can be done on your 1040. It excludes about $130,000 per person of income from taxes per year. For married filing jointly, it's double that. So you can have $260,000 of tax-free income. It's got to be earned income from a job or self-employment. Dividends, interest, capital gains, rental income, none of that gets excluded. To be an expat, as far as the U.S. government is concerned, you have to be 330 days or more in a foreign country within a 12-month time frame. That's time in a country. It does not count days outside of the U.S. Flying internationally counts as being in the U.S. A ship in international waters counts as being in the U.S. A partial day counts as being in the U.S. So the 3 days we were in Sydney, we came in part of the day, we were there for part of the day. We were there for a full day. The third day we left after part of the day. That counts as 1 day in Australia and 2 days in the U.S. So that's why we don't qualify for this foreign earned income exclusion. And the form is 2555. That's it. Questions?
Serious? Okay.
The foreign tax credits can only be credited against foreign taxes, is that right?
No, the tax you paid to a foreign country becomes a credit on your U.S. tax return. And it's a dollar for dollar reduction of the taxes you owe the U.S. government.
Any other questions?
So, do you see any advantage in us, we're not in the U.S., but we're not expats, having a bank account in a foreign country?
As far as taxes are concerned, no. But as far as the U.S. government getting their hands on it, in case the U.S. government decides to increase the tax rates at home, that's helpful to keep it outside the U.S.
Or any recommendations on foreign investments? Do you have any foreign investments? Tell us about it.
I have lots. Because of that, my tax return, the last I looked, was 178 pages. Form 8938, I think, is 3 pages long for each and every single account. So I have loans in Colombia, which are paying 12% interest. We've got a condo in a foreign country. I've got timber. I've got a brokerage account in Singapore. That's enough. I've got others. Right.
Fred, up at the back.
Yes?
I'm not an American, but the question might be applicable. How does the U.S. government on taxation treat a purchase of a cabin on this ship?
I am treating it as real estate. And real estate is, if it's in my name and paid for, is not reportable. But I believe my cabin here is owned by my revocable living trust. That has to be reported.
Fred, we've got another question here.
Yeah.
Fred, since you have multiple accounts in multiple countries, how do you handle foreign exchange?
Most of them are directly US dollar to that currency. I've done very, very little of one foreign currency to another foreign currency. I've used Wise, which used to be TransferWise. It's now Wise, as one way to pay foreign bills. And to keep track of all this accounting-wise, I use GNU Cash, and it understands foreign currencies, and it can look up the exchange rates for me off the internet.
Basically, you answered the question. Wise is what you consider the best way to deal with foreign exchange.
Yes, though, like in the case of Colombia, I had to send the money to a brokerage account in Colombia, and the government took a fee for that transfer. The bank took a fee for the currency conversion because I believe at the time Wise couldn't handle Colombian pesos.
All right, we have another question here in front.
Yeah, to summarize a couple of things, for U.S. citizens, living on the ship gains us nothing, basically, in terms of the tax-exempt earned income, correct?
Correct.
Second, even if we did exclude stuff because the ship was considered outside the U.S., it's only on earned income, not on dividends and interest. Is that correct?
Correct.
So I'm just curious, is there something that U.S. citizens should be thinking about while we're on the ship that might be of advantage to us, tax-wise?
Not that I can think of off the top of my head. Oh, and the VVR stock, since VVR is a Marshall Islands company, it's foreign.
Okay, we have another question back here.
Hi, Fred. Earlier on those slides where you said what's not reportable, you said money that's in a foreign currency is not reportable?
If you physically have the currency. If it's in a bank, you have to report the bank account. But if it's currency in your hand, you don't have to report it.
It's on, Kevin.
Go ahead.
Okay.
The Villa Vie stock, this is something I know very little about. I understand that's something that founders have. And I don't understand how it's not U.S. As far as I know, the Marshall Islands fly the U.S. flag and have the U.S. dollar as their currency.
Well, my understanding was the Marshall Islands is a separate country. Panama uses the U.S. dollar as their currency. So, there are a few countries around the world that use the U.S. dollar as their currency.
We have a question here.
Go ahead.
Hi, Fred.
have to dump it down for some of us. We have, some of us that have a little property in one foreign country, and we've got via our stock, and we own our place here. Starting with our place we own here. I understand we don't own property here, we just own a right to occupy, is that correct?
Yes.
Is that reportable or not?
I'm treating mine as real estate, and if it's in my name, I'm not going to report it. If it's in my trust, I got to report it.
But this is just on that one form, forgive me for not remembering that.
Right.
And then the property that the stock we own, we report, because that's not part of our normal sort of income statements from Vanguard or whatever else. So.
Well, the VVR stock is not in a commercial brokerage account. So that's not reportable.
Okay. And thirdly, when we own a piece of property, one piece of property in a foreign country, even though that in Mexico that property sits in a bank account, I don't own it directly, the bank owns it, and I own a right to that property through the bank. How's that treated?
My understanding is that is one of the exceptions to the rules, in that even though that real estate is owned by a Mexican trust, it's not reportable.
Thank you.
I believe the other exception is Canadian retirement accounts. I see one over here. But you were supposed to report the escrow account when you bought the real estate. And you'll have to report it when you sell the real estate.
Okay, we have another question?
Yeah, hey Fred, on one of your slides you said, if I recall it right, pre-sale real estate agreement is reportable?
Yes.
Okay, can you expand a little bit more on pre-sale? What?
Okay, the real estate itself, if it's in your name, is not reportable. But the escrow accounts used to buy it or sell it, those are reportable. Because there's money involved there, and you have a financial interest in that money. When you have mortgage or pre-purchase agreements, you've got an account of some kind set up. It's an account. They want to know about the account.
This is a 1040 form or just a separate?
Wait for a microphone.
It's. Should I be repeating the questions, or can everybody hear?
Would you?
Yeah.
Sorry, Fred. I just want to make sure, because you transitioned from a former slide to saying, okay, you have to file this with a separate website. It's not one of the tax forms. Is the form 8938 truly an IRS tax form?
Yes, it's part of your 1040.
Thank you.
Anybody else back here before I go through
I came in a little late, maybe you hit this or not, but just so it's clear for everyone, when you have that piece of real estate, foreign, and you sell that piece of real estate, you have, as a U.S. citizen, you owe capital gains taxes on that piece of real estate, which you will pay to the United States government, but get a credit for any taxes paid in the country that it's in. A lot of people make the assumption of, well, this is the reason that the government wants this information. They want to know what you own so that when you sell it, that they can then get their share of the taxes. But some people make the assumption of, well, it's outside the United States, I don't need to pay U.S. taxes on that. But technically, you're supposed to declare it and pay taxes. An example would be if you had a $100,000 capital gain, and if your capital gain for the United States tax purposes is $20,000, and you pay $10,000 in capital gain in XYZ country, you'll owe the other $10,000 to the United States. You don't get taxed more than if the property was in the United States, but you do have to pay the capital gains tax.
That is all correct. Right. The U.S. taxes worldwide financial transactions. Doesn't matter where you live. If you're a U.S. citizen or a green card holder, you've got to pay the taxes. Unlike a lot of other countries. I think there's only one other that, besides the U.S., that taxes worldwide.
All right, any more? All right. I think Fred's covered everything that people, at least at this point, know they want to ask about. So, Fred's a pretty clever guy. He gets you guys to do the speaker's corner. Nice job.